We're going to begin today's class talking about income generated from a small business. Business income is claimed on Schedule C of the 1040. The net amount will flow to line 3 of Schedule 1 of the 1040 and then onto line 8 of the 1040. We'll begin by talking about the sources of business income and how to ask your clients about their small business income sources. We will go into detail when a Schedule C is needed as opposed to reporting ordinary income. Sometimes you have to talk things over with your client to clarify the nature of their business income and expenses to ensure that they are properly reported as income and properly entered as qualified expenses. We'll go into some detail on those expenses and how to complete Schedule C. The client needs to keep good business records, so we'll talk a bit about that. Taxpayers may have both regular employment income reported on a W-2 and self-employment income from a side job. The regular income is reported on a W-2, although a statutory employee may also receive a W-2, and usually has Social Security and Medicare withholding. Earnings from self-employment are subject to self-employment taxes, so you need to properly identify which is which. Self-employment earnings are sometimes reported on the following forms: Form 1099 NEC, non-employee compensation; Form 1099-K, credit card receipts; Form 1099 MISC, miscellaneous income; or a Form W-2 for a statutory employee. Very rare. This individual is specifically defined as an employee by statute. These folks will get a W-2 with a statutory employee block checked. Once you enter that W-2 into TaxSlayer will give you the opportunity to create a Schedule C. Income does not have to be reported on a form. A self-employed individual may have their own records. Uber and Lyft drivers are able to get their information online if they did not bring it with them. A small business owner may come in with a box of books and records. We don't have time to sift through all of that stuff. Give them a Schedule C worksheet and ask them to total their income and expenses on the lines indicated. Businesses with employees, inventory, depreciation expenses, expenses on a business use of the home, or expenses greater than $35,000 are out of scope, as are businesses that report a net loss for the tax year. If you determine there may be a loss, it is out of scope for VITA. This is tough because most businesses lose money for the first few years. However, we cannot do their return. Opening a 1099 NEC or a 1099-K in TaxSlayer will generate a Schedule C. In the case of the 1099-K, TaxSlayer just opens the Schedule C and you have to enter the 1099-K amount yourself. Remember, cash payments to self-employed taxpayers must be included as a business income. Here are some examples of those 1099s. When reporting business income, you will input the income and expenses on the Schedule C form. The net or taxable amount will flow over to Schedule 1 of the 1040, line 3. When completing the Schedule C, you will need to identify the type of business with the business code. You can click on the business code button in TaxSlayer and look for the matching code as close as you can. The instructions for Schedule C has the business codes if you prefer to print them out. The IRS uses the business code as a check to see if the income and expenses reported for that type of small business is reasonable. If the income and expenses fall outside the reasonable range, it may trigger an audit. When reporting business expenses, we cannot detail each and every expense that may be deductible. The first quote is from the 4012 on page D28. In addition, the 4012 points out that the cost of education expenses, including related travel, can be deducted if it is related to the trade or business. Example of an ordinary but not indispensable business expense: an Uber driver who supplies bottled water and tissues to his customers. Example of the non-deductible expenses: social club dues, airport lounges, bribes, or kickbacks. Yes, they are still mentioning bribes or kickbacks. A cell phone, however, is a good example of an expense that is shared between business and personal use. Ask the taxpayer for an estimate of how much the phone is used for business and how much for personal use. Use that percentage to adjust the expense amount. The taxpayer must be prepared to justify that percentage to an IRS auditor if necessary. Businesses must use the cash method of accounting to be in scope. Businesses with inventory typically calculate an end of year closing inventory cost and use an accrual method of accounting. The calculation of cost of goods sold and accrual accounting are out of scope for VITA. We don't do depreciation. It's very complicated and we do simple returns. The business must be operated with the intention of making a profit. Anything else is a hobby. Hobby income is out of scope. If the total expenses are over $35,000, this is out of scope. Generally, expenses at that level involve a capital investment in the business that should be depreciated. If the business has employees or contract labor that is paid on a W-2 or 1099 NEC, we cannot do that return. Business use of the home is out of scope because that involves a calculation percentage of square footage, etc. In practice, the expense deduction of the business use of the home is so small, it's best to ignore it as opposed to just having a paid preparer do a Schedule C just to claim the business use of the home. You can include vehicle or equipment rental expenses if the rental was less than 30 days. An example would be a handyman that rents a tool from Home Depot to do a job. We don't calculate actual vehicles expenses such as repair bills, oil changes, tires, etc. If the taxpayers have used actual expenses in the past or wish to use actual expenses in the current year, they must be referred to a professional tax preparer. Here's another case where the expense differential will probably be less than the cost of a paid preparer. As far as VITA volunteers clarifying taxpayer business income and expenses goes, we are not auditors. We don't need to see their receipts. The client is required to total their expenses so we can include them on Schedule C. We won't accept a shoebox full of receipts, but we'll probably see a few of them in the office. The taxpayer is responsible for any claims should they be questioned by the IRS or the FTB. Be very wary of a client who asks you to tweak expenses to show a profit or maximize earned income credit. You need to be reasonable and be confident that the taxpayer is presenting a true picture of their business, keeping in mind that they may not have the best accounting experience. They will likely have questions and they will need to clarify those for themselves and for you. If the preparer or quality reviewer are not comfortable with the information provided, the site coordinator should review the situation. If the client does walk in with a shoebox of receipts, give them this form and ask them to fill it in. Even better, send them a copy of the form when they make their appointment if they tell you that they have a business. Note that the check boxes at the top are a bunch of trick questions. If one of those lines are checked, chances are the Schedule C is out of scope. The exception here is the 1095A for health coverage. That means that the person had covered California and may be entitled to an ACA premium tax credit. We'll talk about this on the next slide. The cost of health insurance premiums, including Medicare and LTC premiums, are allowable as an expense for taxpayers who have a Schedule C and have a net profit. This is known as the SEHI section, or self-employed health insurance. Self-employed workers can deduct the cost of health insurance as a business expense. This is advantageous when the taxpayer can't reach the 7.5% floor for itemized health expenses. The expense lowers the taxable income generated by the business, but it also lowers the qualified business income deduction. There are separate boxes in TaxSlayer Schedule C entry form for health insurance and other insurance such as property and liability insurance. Make sure you're using the right box. Health insurance expenses cannot be claimed on both Schedule 1 and Schedule A. This is particularly important if the self-employed individual is claiming their Medicare insurance premiums as a business healthcare insurance expense. The Medicare insurance listed on the SSA 1099 should be entered on the Schedule C data entry screen and not on the Social Security benefits entry screen in TaxSlayer. Remember, LTC premiums are capped based on the age of the individual. Those caps don't show up when entering SEHI deductions, so check the TaxSlayer LTC page for the limits based on the age of the taxpayer or refer to publication 4012. Finally, there's a problem if the self-employed individual has covered California and is getting an advanced premium tax credit that must be resolved on the return. The calculations are complicated, so it is out of scope for VITA volunteers. The taxpayer can either claim the expense as an itemized deduction, not claim the expense if they are under the 7.5% floor, or see a paid preparer. If the taxpayer demands we use actual vehicle expenses, please direct them to a paid preparer. We cannot do the depreciation calculation on their vehicle. For vehicle expenses, you can enter miles into TaxSlayer. It does the math to calculate the deduction based on the standard mileage allowance. Going from home to an office or first work site are not deductible unless that first work site is a temporary work site and you have a regular office. Then that mileage is deductible. If a worker goes to a main office to pick up assignments and then on to work sites and then finishes the day by returning to that main office, the mileage between the main office and the work sites is deductible, but to and from the main office is not deductible. Let's take the case of a handyman who goes from home to a work site and back home. That mileage is commuting and not deductible. However, if the handyman goes to multiple work sites or to the hardware store and back from a work site, those miles are deductible. Good record keeping is, of course, important. TaxSlayer has blocks for business miles, commuting, and other miles. Only the business miles are important, but commuting and other miles should be recorded if available. This illustration on publication 4012, page D31, can be used to explain allowable mileage to the client. Self-employed taxpayers can also deduct the business part of interest on a car loan, state and local personal property tax on the car, parking fees, and tolls, whether or not they claim the standard mileage rate. Publication 4012 shows Schedule C areas that are out of scope. On this interface of TaxSlayer, you can see the 3 out-of-scope areas on Schedule C: cost of goods sold, depreciation, and expenses for business use of your home. By the time the client has come to the tax office and has their financial information, they should have everything in order for you. It is not up to the volunteers to spend time separating and adding receipts. The self-employed individual should keep track of all income received and expenses incurred. Some may use QuickBooks or other accounting software to help. It is acceptable for taxpayers to reconstruct income and expense documentation from their bank statements, vehicle maintenance records, or other available information to document the basis for the amounts of income and expenses claimed. The clients must also preserve these records in case of audit. Schedule C filers are audited more often than any other filers. We mentioned qualified business income, or QBI, earlier. TaxSlayer will calculate the QBI for you, but you need to understand what this is and be able to explain the 1040 entries to the client. In general, QBI is a deduction of 20% of qualified business income. QBI can show up in a dividend statement as a Section 199A amount. These are usually real estate investment trusts or REIT dividends. It appears on Form 1040, line 13 as an income deduction after the standard or itemized deduction, thereby lowering taxable income. It is the lesser of 20% of self-employment income or taxable income in the case of an REIT dividend, and it cannot reduce your taxable income to below zero. QBI phases out at $182,000 for single and $364,000 for married filing joint. Not a factor for VITA clients. This list, which summarizes out-of-scope situations for a small business tax return, is from publication 4491, the VITA TCE Training Guide, page 9 to 14. Due to the myriad of different business situations, this list may not be all-inclusive. We have talked about most of these, however, there are a few new items on this list. We cannot deal with businesses that operate on a barter economy. For example, I'll paint your house for your original Pokemon Pikachu card. Can't do it. We also can't handle businesses that accept returns of goods and provide allowances for returns. A business that reimburses employees for expenses is also out of scope. We cannot do businesses that suffered casualty losses, such as a business that had a fire or theft during the tax year. In order for us to file a Schedule C, the taxpayer must materially participate in the business. In other words, we cannot file a Schedule C for an investor or silent partner. Once again, if the business has employees paid by the W-2 or 1099, it's out of scope. Businesses engaged in the sales of marijuana, including marijuana delivery services, are out of scope. And we cannot do businesses that accept digital assets such as Bitcoin for payment. Although this sounds like a lot of limitations, there is still a wide range of small business Schedule Cs that we can do. Maintenance workers, gardeners, housekeeping, amateur sports officials like soccer referees or baseball umpires, and more. These limitations just exclude the more complex business situations that require a lot more tax training. Today, we went over business income and expenses and took a deep dive into Schedule C. Does your brain hurt yet? Don't worry. Read or revisit publication 4012 in the income section, and if you're ever in doubt, email or call your site coordinator to get you connected to a previous year's volunteer so you can greater understand the information. You can also start looking at the flashcards you have been provided for a chance to practice looking up answers to questions and understanding the material. The information will be repeated often and used as you volunteer, and you will get more comfortable with our software. I promise eventually this will all click. We will be there with you until it does.